Hi, I'm Dr. David Dobson. Welcome to Conversations. Today, my guest is Denis Eduard Heise. Denis is a private equity specialist. He is an executive PhD candidate in the Antwerp Management School at University of Antwerp. His research is in the field of private equity and factor investing. Denis earned the Master of Applied Finance degree from Queensland University of Technology and BA in International Business from Cologne Business School. It's a great pleasure to have you with me today, Denis.
I'm glad to be here. Thank you very much for inviting me over.
You work as a private equity specialist. Can you explain what private equity is and what you do as a specialist?
Okay, I would like to start actually off with the name private equity. As we all see, it has two components in there, one being very critical for the definition. Private equity means actually unlisted equity investments, but can also be debt, then it's called private debt. And as such, you are dealing with companies who are not listed on the stock exchange or listed on any other exchange for such matter. These companies often thrive in an environment which is very low, which suffers a very low level of observance, and as such, it bears a lot of fruit and potential for research. But also, when it comes to work, this entails obviously a lot of, let's say, very interesting aspects. As you are less observable, you are able to exercise more, let's say, creative strategies, more creative ideas, and as such, you are able to generate value for the companies, for shareholders, and actually for the people within those companies. As a private equity specialist as such, I'm usually engaged in project management activities. This is a very broad aspect of my work. However, to detail it down to, let's say, the most common engagements I face, I'm usually dealing with transactional related work, like if a company is being bought, if a company is being sold, financing activities, if a company has to be refinanced, if a company has to be restructured, or as integration work, succeeding the transactional work, meaning classical migration work, merging two companies, systems, cultures, and also, after all, the shareholder base.
You worked your entire career in private equity, and then you decided to pursue your PhD to dig deep in research. Why?
Well, this is this is a question which I face very often. And it's actually based on a very ironic story, which I still have right in front of my eyes up to this day. I was working in my first job also in a private equity fund of fund manager. So a private equity or a fund of fund who invests into other private equity funds. As such, when you join such a fund as an investor, you have to fill out subscription documents and you have certain due diligence documents to look at. And after I got the first, let's say, subscription set, as you call it, I was a little bit surprised. You are looking into the people managing the fund. You're looking at elements like how's the tax structure, how's the reporting structure, and how did the past funds actually perform, and who's the deal team. But you never really dig deep into the actual investments, the actual strategy. You say they're investing in healthcare, you say they're investing into infrastructure, that's fine, but you're not looking into the markets in detail and how they actually co-joined. And as such, I went up to one of my former colleagues who was a risk manager at that time. And he has actually a quantitative PhD. And I was speaking to him and like, okay, I'm like a little bit surprised here. What's going on? We are placing rather big amounts of money. However, we are not really looking into the, let's say, underlying what's going on. And he was like, yes, that's actually true. But this is based on a lot of aspects. And actually, one big hindering aspect, the private part. Private equity underlies also very high levels of confidentiality. And therefore, research was very limited in that field. And I was asking myself, okay, so you are setting a gut feeling to be rather, let's say, aggressive in my argumentation over an actual quantitative base and placing quite big lump sums of money into that bet. And he's like, yes, that's actually what's been going on. but also because research usually doesn't get the detailed entry path into this field of research. After a couple of years rolled forward, after I joined a couple of other companies, I came back to that question and said, that's actually something I have the network to get the data, so why not try to explore it? And what's happening in the worst case? I can say there's no quantitative measurements stating that private equity is underlying any quantitative measures, dependencies, etc. Then it's also a finding. So just summarizing that in general, I was just not satisfied with the answer of saying it's just the case as it is, first of all. And second, we can't tell you why it is this way.
You are studying factor investing in private equity. Can you please explain your research?
So, as I mentioned before in my motivation, finding the reason why certain things develop certain ways. So, in the end, in the search for dependencies, causalities, etc., I was actually intrigued by the idea to find out, are there any in the field of private equity? The critical element here is to do a factor analysis, you need a rather large data set, which is very difficult to obtain. And as such, this is one of the biggest challenges next to being private equity as an asset class being a rather closed shop environment. However, that factor investing approach gave me the, let's say, easiest way to the first answer. Is there causality? Is there something which we can depend on? Just to provide a rough overview, if we are looking at causalities into certain industries, we sometimes speak about logics which can be anticipated, which can be used in a lot of practitioner approaches. But more in detail, it's in the end a model which is used by a lot of, let's say, financial specialists, which is an extension of the CAPM, the capital asset pricing model, where we are trying to identify the beta and how does the beta interact, how significant is it, and how does the beta in the end create the additional value.
With rising interest rates and inflation, based on your research, how can financial institutions avoid an economic standstill?
Well, with rising interest rates and inflation, obviously we encounter an environment in the macroeconomic space which we haven't encountered for quite some years. This is due to a low interest rate politics which have been exercised over the better half of a decade. And we are actually facing kind of now the consequences. But as there are consequences, there are opportunities. As such, certain investment opportunities arise and certain financing opportunities as well, because if there's an investor that's providing a financing opportunity for someone else. As such, like I mentioned before, private equity refers to unlisted investments. So investment structures usually on a bilateral level with, let's say, fund managers and an underlying portfolio company can be structured in a more creative way than, for instance, a bank loan. If we're even going a step further, there are a lot of credit funds in the markets who have been accumulating money over the last years and are actually becoming more and more prominent these days. Why? If you're looking into a bank financing, you usually encounter, let's say, some timing issues, especially when you're trying to refinance. You have to jump through a lot of hoops regarding regulation. You have to go to certain decision makers, etc. I've been part of a conference where, back in 2020, where the lead investment manager was actually speaking about that debt funds were able to place capital within 14 days. And when we are comparing this to the ahead time in, for instance, the field of banking, this is a total different ballgame. I mean, quick debt doesn't always mean it's good debt. It's cheap debt. It might be more expensive. However, the structuring side of this can provide a lot of opportunities. Saying all that, I think private equity, private debt has established a new form of financing, which may create a little bit more flexibility and therefore be better suited for certain market and changing market conditions.
You are the youngest student in the executive PhD program. How does it feel to be the youngest in your cohort?
It is actually a rather interesting experience. I was I was aware when I joined the program that I was actually too young to join, but managed through a certain approval process to get into the scheme.
Okay.
And I learned a lot about myself. I learned a lot about how the world works through this PhD program,
Yeah.
especially dealing with colleagues and cohort members who have probably experienced way more than I do, and who have probably had different life stories, interesting life stories.
Yeah.
Actually helped me to enrich my research, but
Yeah.
also foremost my character, and also learn a lot about myself in that time.
Right.
Decisions are formed differently when you're speaking into different age groups. The visions are different, and therefore it also brings a lot of new information into the context. Instead of saying, do I have a problem? How can I fix it? You can look into different different decades of answers. You can look into different decades of approaches, and also for mostly they have also experienced different market situations, while I have at this point only experienced 1 or 2 market cycles. Studies I have been actually in Germany, where I did my bachelor's. I did my studies in Hong Kong as well as in Australia, and did a couple of work experiences across the globe during that time. I find it very interesting and very enriching, actually, to on oneself to experience different cultures, because certain cultures tackle problems differently. And it's just like another skill set you acquire. Like, how do you handle a Chinese investor versus, for instance, a European-based investor? Or how do you handle an Australian-based investor? There's also different approaches, traditions, communication ways. And ironically, this is actually one of the things which has enriched my life the most, working internationally and therefore exchanging international. More foremost, if I'm looking into all my experience, also looking into my cohorts, where we have a lot of different ethnicities, a lot of different cultural backgrounds, you find a very nice melting pot of different cultures being commingled, and also different traditions being approached. And overall, I would say this is also something very enriching, and it's actually providing me, let's say, fast track experience to additional cultures. Yes.
Finally, do you have advice for professionals who are in the industry and looking to go back to university to do an executive doctorate?
Well, first of all, getting a PhD always sounds like a sole academic work. And unfortunately, I have to tell you, this is not the case. It's actually more about time management skills.
Okay.
A PhD is based on consistency, discipline, and a vision. And everyone who is working, and everyone who is working in any industry, will tell you that those attributes and those ways bring you actually forward in your career. A lot of my colleagues, and myself included, decided to go into the PhD because we're on the search of knowledge, which is still a valid reason. But because we are going for the search of knowledge, we are also trying to develop ourselves into the next level. And therefore are able to progress in our careers, in our personal developments. And I would just say, most important part, don't be afraid, don't underestimate taking something from a sole theoretical point of view, because it can be in practice more than relevant.
Thank you for your time, Denis. Have a great rest of your day.
Thank you very much, David.